In the last year, Luna has more than 18x'd in value and hit a market cap of $21 billion. The cryptocurrency that is particularly large in South Korea has a compelling set of co-founders, some real-world applications that are enticing, and a novel approach to their stablecoin product. In today's video, we're going to talk a little bit about how Luna works, break down the bull and the bear case for this cryptocurrency, and get into the long list of existing payment processors that they are aiming to disrupt. Stay with us.
I'm Hannah, this is Erin, and you're watching the Piper Rundown. We analyze business and culture to help you win. Today's sponsor of the Piper Rundown is FreeUp. Everyone needs some help with their marketing. FreeUp is the best platform for finding vetted freelancers to help you with copywriting, web development, graphic design, SEO, and even posting your product on Amazon. Check out the platform and make your first freelancer hire. You'll get $50 off with the link below.
We are breaking down in today's video Terra Luna. The cryptocurrency has a $21 billion market cap. A single Luna is priced at $54.10 at the time of this recording in USD. It is also priced at 0.0013 BTC. On this channel, we don't think Bitcoin is going anywhere over a long time horizon. And so we think it's also worthy to price things in BTC, because not only when you make an investment decision are you considering whether or not to put your USD in there or whatever your currency of choice is, but you could also potentially be investing in BTC instead. So it's always important to evaluate a cryptocurrency investment through that lens. Terra Luna occupies the expanding pie chart of L1s, layer ones that are trying to be the ground source of truth for transactions that are going on in the economy. And they actually, Hannah, are two different currencies, and that structure of two different currencies is where the Terra Luna name comes from. Okay. Terra, Earth, is a proof of stake blockchain. It is a stablecoin that is algorithmically priced to always land at approximately the equivalent of one currency. For USD, their US currency, UST, is always aiming to be at $1 worth of value, but they also have a Korean won stablecoin, they have a euro stablecoin, they even have a Mongolian tugrig stablecoin. Wow. And with all stablecoins, this isn't a stablecoin video, the premise is that it is a one-for-one, like-for-like, fungible alternative to trading in the actual paper currency of that said economy. Now, unlike most other stablecoins, and we're going to cover the other stablecoins later in the comp section, this is an algorithmic stablecoin. The next three biggest are not algorithmic, which means that they actually have a cash or cash equivalent on the back end that stands in for each stable coin that one could be trading in. So you trade in your stable coin to them, they give you back cash as an equivalent. Gotcha. An algorithmic stable coin works by having an automated market making system, meaning when the value of a Terra, whether that be in won, USD, euro, something else, if the price of that stablecoin were to climb to say $1.05, what they're going to actually do is start printing more Terra. Because if you could have a Terra that is going to be worth $1.05, everyone is going to want to buy that Terra for $1 and sell it for $1.05. Naturally. So they're going to print until everyone that has it and it's worth 105 has decided to sell and brings the equilibrium price back to $1. Conversely, when it starts to fall, they will actually take UST out of the supply. They will burn it in order to limit the supply and raise the relative value of a single Terra. So this is a novel kind of blockchain native style of creating a stablecoin or a cash equivalent. All analog old school models of cash equivalency work like these other stablecoins do, where there is some form of collateral backing it up. There is no collateral backing up your stablecoin if you're trading in Terra.
Okay, makes sense.
Luna is what's being burnt or destroyed in order to maintain that level of stability. The origins of this are relatively young. It was founded in 2018, and there's two characters that you need to know. The first is Do Kwon. Do Kwon previously started a company called AnyFi, which is basically trying to make internet free and accessible to anyone, anywhere, like Wi-Fi, but for anyone.
Love that.
Right? Didn't quite work out, but then he got together with a friend, wrote the thesis for a protocol that ended up being the structure for Terra Luna. He got into contact with Daniel Shin. Daniel Shin had ran and successfully sold and served as CEO of the second largest e-commerce company in Korea, Tmon, short for Ticket Monster. He now, after helping to co-found Terra Luna with Do bringing the techno acumen, Daniel bringing all the kind of business sense, what Daniel is now doing is running a payment app called Chai Finance. Chai on its own has raised a $45 million Series B from SoftBank. And what Chai is doing, if you want to try to think about it, it's very similar to somewhere in the between region of Alipay, Cash App, these other digital wallets of kind of conventional banking variety. But because they use UST or Korean Terra as a undercurrent for their payment rails, they're able to offer better pricing than conventional credit card processors. Anytime you swipe your MasterCard, your Visa, your Amex, when you swipe that, at least 2% at a minimum, is not going to the merchant with which you are making that purchase. It is going to those payment processing companies who are the rails for all sorts of transactions and basically collect a rent on all economic activity done with credit cards.
Wow.
Terra is able to run a payment processing network with its underlying technology for only about 1%, sometimes even less than 1% fees.
Damn.
So what Chai Finance does is it offers, amongst other ways to transact, it's not exclusively moving Terra, it's other, PayPal, other conventional payment processing things, but it basically says, hey, would you like to pay with this with your credit card, with your PayPal account, or with our native currency, Terra? If you use Terra, you get a slight discount on this thing that you were about to buy.
Wow.
So you as the user say, let's fucking go. On the flip side, the merchant says, so you're saying if someone buys using this credit card, I lose 2 to 3% of the transaction, and if they use Terra, I lose 1%? Cool. I'm gonna do that 100 times out of 100.
Right.
And this is one of the multitude of ways in which they are on-ramping usage and integration for their underlying blockchain cryptocurrency into the wider economy.
Holy shit, this is layered. Wow. You're doing a good job though.
Another thing that they're doing is, in order to build the primitives of an ecosystem that people will want to participate in, they have to create other ways that make financial machinations attractive to potential users, institutions, and entities. One of those is something called the Anchor Protocol, meaning if you get stablecoins specifically in the form of Terra, you can put those stablecoins into the Anchor Protocol for saving and make as much as 20% interest on that savings. What type of interest does your bank currently give you for your savings account?
I have no idea, but something ridiculously low.
It is probably at most 1.5%.
Yeah, if that.
Right? So someone like you could say, well, I've got this little parcel of cash that is just my savings. I'm going to go move that into Terra. Then I'm going to move it into the Anchor Protocol, make some money back, and have less of my wealth decayed by inflation.
Love that for me. Sounds great.
They also have tools like Mirror, which are basically the structure for creating other forms of synthetic assets. You know what an ETF is? An exchange traded fund is a way of basically trading on an underlying asset without holding it itself. So a gold ETF isn't the actual acquisition of gold, it is trading on the notional price and the perceived future value of gold, be that going up or down. Another important part of analyzing any cryptocurrency is understanding the voices and the characters involved who are cheerleading the space generally. For Bitcoin, it would be Pomp, it would be all sorts of other characters that people are well familiar with. In this case, some of the Lunatics are billionaire Mike Novogratz, who actually has a tattoo of the Lunatic logo on his arm. Remy Tito, one of the Real Vision GMI characters, and Michael Arrington was an early investor in Terra Luna, who was also the founder of TechCrunch.
Nice. It's always interesting to see what types of characters back these different cryptocurrencies and if it adds or decays from their perceived value by everyone else. But
let us know in the comments who, if they were to buy it, would be a negative signal for any cryptocurrency. It doesn't have to be Luna.
Yeah. It's a great question. Let us know in the comments. Aaron, you got some numbies for us?
I sure do.
Oh, let's go.
Current circulating supply for Luna is 400,919,660. Now that can fluctuate with the burning or the introduction of more into the supply to stabilize that stable coin. However, that is a substantial amount of circulating supply.
Yes,
the daily volume that's traded of Luna is about $1.25 million, meaning that the majority of Luna, 95% of it, is not trading on any individual day.
Wow. Is that super unusual?
That's potentially unusual, potentially not unusual. So there's two ways to think about circulating supply and the trading volume of the total supply. If you and I created a cryptocurrency and we were the only two people that owned any of it, you could potentially have 0% actual trading volume. So more tends to be a good indicator. But on the flip side, if no one is holding it and 100% of the entire volume turns over in the same day, that's also an indicator that no one actually values holding on to it.
Right, makes sense.
So we're somewhere in between those two. I would say that's a relatively strong number, but let us know in the comments if you disagree. Further, here is the stratospheric climb that Luna has been on over the last year. February 6th, 2021, Luna was trading at $3 per token.
So just over a year ago.
Since it now trades at $54, that is an 18x return in a single year for folks that were holding Luna a year ago.
Wow.
Two of the reasons to be wary, when someone has achieved that amount of return in a single year, that will make them very positive, optimistic about it. But if you buy now, you are not buying that return that has already occurred.
Right.
So you have to evaluate it on its price now, not on the price that it was a year ago. UST is accepted in more than 20 e-commerce stores, including the second biggest one, Korea, Tmon, which is now owned by KKR. So Daniel Shen sold Tmon, amongst others, to his majority investor, KKR, and exited the business primarily. He is also certainly going to have the influence to create the relationship that allows this to be one of the ways in which you can transact on Tmon. I would argue that potentially the fact that that number of e-commerce stores is not being higher, potentially a part of the bear case that we'll get into later. But still impressive that they have real-world use cases when a majority of cryptos are white papers and concepts and pure speculations. There's actual utility happening here.
That's pretty cool.
They do it, we already talked about, because that 3% fee being dropped to about 1% for merchants is a huge value add. There are more than 500,000 users of the Chai Finance app, meaning that they're also interfacing at the user level with UST. And because this is a proof of stake blockchain, meaning that instead of miners actively securing it for block rewards, and which is how Bitcoin works, there's a different model. There are 130 validators of transactions, and they need to have hundreds of thousands of Luna in order to become validators of the Luna network. 130 validators, once again, stronger than a majority of proof of stake networks out there, but far from as decentralized as a conventional proof of work blockchain that uses way more power. Chai, the finance app that we talked about Daniel Shim founding, is way behind the top 2 payment processors in Korea. It's currently at least in 3rd, if not further behind. And the platform that it is built on is based off of the Cosmos proof of stake mechanism Tendermint, which is able to transact in up to 10,000 transactions per second. That is what you need to be a broadly used app, but it has not been proven past that point. And so at the high end of the spectrum, in the most bullish of cases, there is skepticism as to its ability to scale at some point in the future, but that is a ways away.
Gotcha. A lot of numbies. I'm excited to move on to this comp section where I'm assuming we'll hear about more of these stable coins that we mentioned previously in the video. But the comps is where we talk about comparable companies and competitors in the space.
So the starting point for the comps is not a cryptocurrency, but it is those conventional rent-seeking payment processors that we talked about early in this video. MasterCard has a $375 billion market cap. Visa has a $479 billion market cap. Amex has a $144 billion market cap. Block, formerly known as Square, Jack Dorsey's primary focus, $65 billion market cap. Those first 3 in particular are transacting on way more volume than Terra Luna currently is.
For sure.
They are also taking larger transaction fees on those transactions. So to validate a reasonable, let's just say Amex at the low end, $144 billion market cap, which at this point, with the $21 billion market cap, would barely be more than a 7x from here.
Yeah.
That seems crazy in most instances, but after an 18x, people Google it, I think, yeah, of course, 7x.
Right.
That would take it to the Amex market cap. Amex is doing so many more transactions with so much more revenue than what Luna currently is.
Yeah.
Second set of comps, Titan and Iron Finance. Now, Titan and Iron Finance were also algorithmic stablecoins.
Ah, okay.
They both blew up. There is no more successful version of an algorithmic stablecoin than Luna.
Whoa.
So there is nothing to point to that says, well, this one flew higher, saw more success. The other ones that have done something similar and admittedly had faultier business models blew up, zeroed, broke.
Whew, okay. Very interesting.
The stablecoins that haven't blown up, although there is also skepticism about one of them in particular, that are bigger than Luna. USDT, Tether, all sorts of controversy, all sorts of doubts about the collateralized nature of their stablecoins and whether or not there actually are assets to back up all the stablecoins that have been issued, is the biggest stablecoin. Okay. The next biggest, and I would guess, I'm not an expert on this, but if I had to say this is the one I feel most comfortable with, it's the next one. USDC was co-founded by Coinbase, one of the tightest from a regulatory standpoint financial crypto institutions, and Bitmain, one of the most old reliable firms in the world of Bitcoin. Very reliable, very conservative, enormous cash equivalents collateralized. And then finally, Binance. Binance is also a bit of a cowboy Wild West organization, but also has an enormous amount of stable coins that they have issued as part of being the biggest crypto exchange out there.
Gotcha. That is the comp section.
Important to note, all of those way more centralized than Luna. So the people that have an appetite for decentralization are gonna pick Luna over any of those 3.
On to the meme factor, where Aaron and I rank the memeability of a company on a scale from 1 to 5. 1 being negative memes, 3 is completely neutral, and 5 is all the positive, dank memes.
But for cryptocurrencies, your floor is really 4. Kind of like...
Absolutely true.
In certain instances, there's a floor on a certain type of pizza. It can't really go below something if it's of a basic quality. Crypto is the same way. The memes are baked into the cake.
Absolutely.
To some degree.
Oh, yeah.
If you were below a 4, that's really, trouble.
You're completely right. I will say that even just given some of the other stable coins you threw out there earlier, Titan, what was the other one?
Titan and Iron Finance, the algorithmic stablecoins.
Yes. I really like those names. I think those are very solid names. So just in comparison, Luna's not quite there.
Terra Luna, the Earth, Moon. The moon is what, you know, creates the tides.
Listen, I know that the Lunatics are gonna come after me for this one, and I don't know what lunacy. This is lunacy that I'm speaking right now. I'm gonna go 4.2. Yeah.
I'm going 4.6.
Ooh, whoa.
And here's the additional reason, Hannah.
Okay.
This is a company, a platform, that is biggest in South Korea. That is where the majority of their payment processing is.
Okay.
These are the same characters that are in the K-pop armies. They know how to mobilize.
They do.
So I will ask that if you are one of those lunatics, please do not direct your vitriol at me, Aaron Watson, 59 on all platforms. You bring me the love. Hannah, what would you like them to do?
I would like, well, instead of bringing me the hate, which I think you were implying,
No.
I would love for you to smush the like button. All right, on to the bull and the bear case. I'm excited for this.
The bull case starts with what most startups will call out very early in a pitch deck, the TAM, the total addressable market.
Yes.
They are talking about, at a starting point, the total addressable market of Visa, MasterCard, and Amex.
It's a big ass market.
Starting point. Then you add in the savings protocol and the other synthetic assets created by Mirror.
Oh, man.
And you start to talk about the entire apparatus, DeFi as a concept. Then you add in the fact that they have already deployed NFTs on Luna.
Ooh.
And gaming.
Whoa.
The TAM, if this were to fully realize its potential, which we acknowledge, is not a high probability. The TAM is in the realm of the size of the economy.
That's pretty freaking ridiculous.
It is.
Pretty compelling bull case to start out with.
And the disruption goes even into other payment processors. We didn't even mention Stripe. We didn't even mention PayPal in those other market caps.
Shit.
So that is a jaw-droppingly enormous tool without a similar, there are some, but there are not many similar actual consumer applications yet operating at that level. You could point to something like Cash App, which is owned by Square/Block. They're not assisting people in actually transacting day-to-day in Bitcoin.
Right.
Bitcoin sits on the store of value use case primarily. And this is not occupying that space. Now that's going to be part of the bear case in a second here, but the fact that they are firmly in the day-to-day goings-on operations puts them in the battle space for one of the biggest markets on the planet.
Wow. Getting me hyped up here, Aaron.
Secondarily, they already have substantial revenue compared to other projects.
True.
So in the totality of projects, the revenue that's coming into the protocol itself to continue to develop to make it a valuable experience is in the top 10, potentially even in the top 5 of all cryptocurrency projects. So in what is also a battle for developers. Are you developing on the ETH? Are you developing in ETH? Are you developing on Terra? Are you developing on one of the other L1s, Solana? That is one of the deciding factors for that end up TAM being accomplished.
Yep. Wow.
Finally, the gaming and NFT application is a additional very big part of the economy. Gaming, we're not going to get into the nuances of how big video games and gaming generally can be, but we're talking about similar scale to what the entirety of the sports economy is. Yeah. NFTs, we're talking about other forms of ownership. Potentially very, very big deal. Now on to the bear case. There is still a degree to which this model is reliant upon some form of consistent inflow of capital. And folks that will sweep with a broad brush and say Ponzi at many of the cryptocurrency projects that they say will point to that specific factor. If you are reliant upon a consistent inflow of capital on your platform into your mechanism, and it stops working when the money stops flowing in, there are similarities to a Ponzi scheme. I'm not saying that that's what it is, but even from an outsider's perspective, who doesn't know as much, who didn't watch all the way to the end of this video, if they just get that point, they're going to be hesitant.
Sure.
Further, there is a larger thesis. I am not the first to articulate this, but it is important to understand when we think about cryptocurrencies generally and the point of value accrual. Bitcoin, and part of the reason we said at the very beginning of this video that we are going to price every cryptocurrency that we analyze on this channel in BTC, because if you are a buyer or interested in cryptocurrencies generally, that is usually where you're going to start in terms of understanding these platforms, and it is also the safest on a risk-adjusted basis asset that you could hold. They have pole position on store value. They have pole position in network security. And I do not see a world in the short term where that goes away outside of the entirety of the cryptocurrency market itself collapsing. So if you buy cryptocurrency, I think you have to buy that there's a place for Bitcoin in the future.
I would agree.
In conjunction with that, Bitcoin, therefore, really sits on the store of value mantle in the spectrum of cryptocurrencies out there. There's a whole other swath of currencies that operate something more like working capital. And I talked about that before. If it was always traded, if it was always moving throughout the system and never held because of its potential to store value, then what you have is something that is not inherently positioned to continue to accrue value. This works in all assets. People hold a piece of real estate because they think it'll be worth more in the future. People hold stock because they think it'll be worth more in the future. People hold a bond because they think it'll be worth more in the future, or at least be as valuable in the future. Bond's not the perfect example here. If the only utility or the reason that I would have this cryptocurrency is it makes spending easy, then sure, I'll use it in order to pay less fees, but the likelihood that I'm going to continue to hold on to it and be a part of the diamond hands that are not deploying it is reduced. And so when I think about that, and I think about in general the entire spectrum of L1s, all the other L1s that are actually competing to dethrone ETH, Solana, Luna, these other ones that we're going to evaluate in future videos. You should hit subscribe because this is good stuff, right? They are all competing in an arena where there is this fluidity between one another. Perhaps because there's a multi-chain world and they're interconnected and it's very easy to move value in between, but also partially because these are working capital platforms. I want ETH because it allows me to buy that NFT. I want Solana because it allows me to play that game. I want Luna because it allows me to buy that other thing. As opposed to, I want it because of what it is worth. There's a nuance there that I think is a decent critique across all the other L1s generally. Now you could say, I reject that thesis, I reject that framework, and this part of the bear case isn't going to be there, but if you're not at least intellectually considering it, you're not being intellectually honest. The next point, this is a non-collateralized stablecoin. History suggests most algorithmic stablecoins blow up. So you are also betting on the probability that this is the one that doesn't, as opposed to some other industry where most of these work, most of these continue, most of these survive. Most railroad companies that were around 10 years ago are still around in some way, shape, or form. So this is not that. And we're not comparing cryptocurrency and railroad investing for obvious reasons, but you have to come in eyes wide open with that on the bear case. I also am slightly worried about their actual traction. If that number, the 20 e-commerce stores in Korea, is about a year old. If I had quadrupled that, if I had 10x'd that, if I had 50x'd that, I'd be letting people know.
Sure.
I would be, because that's hype. That's the meme factor. That's the 4.7 for me, the 4.3 for you. But the fact that there aren't more is suggestive that the adoption rates are not at least blowing the doors off. Concerning.
Makes sense.
And then finally, another part of that L1 conversation is, do you see this as a future in which the L1 is the thing, or is it possible that the L2s are particularly important? What that basically means is, very simply, Polygon just raised $450 million US. Polygon is primarily an L2 for Ethereum, meaning you buy some ETH, you trade it in for a little bit of Polygon, and then you trade Polygon for no fees, and you're still engaged on the Ethereum network, which is more robust, more decentralized than what Terra Luna is.
Right.
And so that is yet to be determined, but is a part of the potential bear case for Terra Luna. I'm sure I missed some stuff. I'm sure the bulls are going to roast me in the comments. I'd love to hear it. If you think I missed part of the bear case, feel free to add that to the comments as well. And before we go, we're going to let you know where you can buy these cryptos, because it's different for every single one.
Oh, yes. Wonderful.
Binance, Kraken, Gemini, Voyager, Uphold, Bityard. If you wanted to articulate a little bit more of the bull case, you could suggest that if that were to come to Coinbase, if that were to come to some of the other major platforms, that would also be a part of the bull scenario.
Absolutely. Wow, you killed that rundown. Absolutely killed it.
Yeah,
props to Mr. Aaron Watson. We're trying to come up with a moniker for you too here. So if you have any suggestions, please leave them in the comments. Thank you to FreeUp for sponsoring this rundown. Remember, you can get $50 off your first hire with the link in the description box below. Thank you for watching the rundown.